Alrighty, we are live, and today I want to go into learning just basic trading, trading and how to learn how to trade, in my opinion, with ICT concepts. Now, there were so many people come on TikTok, but there are only two ICT concepts that you need, are the fair value gaps and the liquidity points. That is it. And that's really all you need. So let's talk about it. We're going to get started on YouTube without waiting for people on TikTok. So the two main ICT concepts you need. The two main ICT concepts you need. One, fair value gaps. And two, liquidity. This is all you need to learn how to trade. Fair value gaps and liquidity. That is it. What are fair value gaps? Fair value gaps are just three gaps in a candle. Actually, I lied. You do also need price action. You need price action. Price action is just how the market moves. It varies for some people. It doesn't vary. I mean, most of us look at it the same, but we just know that the market, it will zigzag up. You know what I'm saying? It will also zigzag down. And then it will zigzag sideways. So this is the way the market moves, always. That's it, okay? You have uptrend. You have, sorry for TikTok. We have an uptrend, we have a downtrend, and then we have a consolidation. That's how the market moves, okay? That's how the market will move all the time. All the time. The three main things you need: price action, fair value gaps, and liquidity. Price action is just the market moving up, the market moving down. You know, if a market moves up, it's going to retrace a little bit, and then it's going to go up. There's different ways to retrace. We have my favorite one, fair value gaps. If it's going up, it's going to be bullish if you're in an uptrend. If you're in a downtrend, it's going to be bearish, okay? Now, there's other things you can use, golden pocket, whatever. There's so many things you can use. But these are the basic ones. Let me turn on my YouTube chat, sorry, on my iPad. But yes, this is it. And then consolidation, you don't want to really trade that unless it's consolidating on a higher time frame. Because the higher time frame, the moves are still big enough you can react off from. That makes sense. Now, liquidity. Liquidity is the swing highs and swing lows. This is a liquidity point. This is a liquidity point. This is a liquidity point. I'll mark them with lines for y'all. This is a liquidity point. Boom. This is a liquidity point. Boom. This is a liquidity point. Boom. And this is how you set know where it's going to reverse and or set your profits. I always set profits at a liquidity point or a higher time frame for value gap, but for the most part this. So basically, if we want a reversal and we go back up, my TPs are going to be these pink lines. And if we're going down, it's the lines on the side. Now, for ICT concepts, the main thing that he taught us was how to spot a market structure shift. Now, I'm going to show y'all that right now. If you're in an uptrend, you're making higher highs and higher lows. You know what I'm saying? That's higher high, higher low. This high is higher than this high. This low is lower than this low. That makes sense. High, this high is higher than the previous high. This high is higher than the previous high. This low is higher than the previous low. This low is higher than the previous low. When do you know a market structure is shifting? When we get a candle close below the low. You see what I'm saying? Once we broke this low to the downside, we are now in a downtrend. And usually it leaves a fair value gap. And then you want to enter when it comes back up to this gap and then continues lower. That makes sense. That doesn't make sense to you, you'll have to watch some videos on it. But this is what came from ICT that changed my fucking life. Like knowing when to know the market is shifting. And that's why ICT traders, we trade mostly reversals. Now, I learned how to trade continuations. It's funny because I used to be like, what the fuck, how do I trade a continuation? And it kind of came to me very beautifully, and now I know when to do so. But then, same thing in a downtrend. I'm going to clear this. In a downtrend, in a reversal back up, we're making, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. When we close above, boom, market structure shift. We are now in an uptrend. I now personally, because I trade the 5 minute and the 1 minute chart, I will get in as soon as this candle closes somewhere. That's where I enter. But I used to trade the fair value gap. Now, since we're going back to the upside, the fair value gap is going to be green, as you see over here. You technically, for your optimal trade entry, will want to come back here and then continue up. Boom, boom, boom. That's how I started trading. That is it. Now, if you get in a trade here, your targets are previous liquidity points on the way up. Simple as that for me. Obviously, it might run up faster. You might look at a higher time frame, something, and then you'll see a target on the higher time frame. You might want to just hold it and wait it out. There's so many reasons why you would hold a trade or not hold a trade. For me, I just do liquidity points because I know for sure it's going there, and then I try to get a 1 to 1.5 or a 1 to 2, 3, 4, depending on the trade. You know what I'm saying? So for me, I wound up switching to only trade the 10 a.m. candle, the 4-hour 10 a.m. candle, which is this candle. This day, it wasn't that nice. I'm not gonna lie to you. This is not as nice of a move as these. You know what I'm saying? These moves are better. However, how do you trade that? You look and you see if it wants to bounce out of a gap. This day, it did. You see here, we came into a gap, we bounced out. That was our 10 a.m. candle. This day, we did not. But this day, we did do what? We swept liquidity of the previous sessions, and then we ran up. We're in an uptrend on the 4-hour. So at this point, you're looking for some kind of entry. Or you could trade, because what I traded, it wasn't this day. I think it was Wednesday. I traded the down. We got this nice hammer. I traded down to this fair value gap. And then the 12 p.m. traders traded the reversal back up. So you can know it's either going to a fair value gap or it's going to liquidity. The market moves to a fair value gap or moves to liquidity. So you just need to know where it wants to go. And then on this day, we did have an hourly fair value gap up here that I knew we were going to. And I can show you what that gap looks like. It was this one here. The market went up into that fair value gap and it hit it perfectly. You see what I'm saying? So this is an indicator. You don't have to draw them. I know there's this guy who loves to tell me, like, you lean on indicators too much. I don't. Because a lot of indicators, yes. When you start trading, consolidation, manipulation to expansion. Exactly. A lovely power of 3, which is accumulation or consolidation, manipulation, a sweep of a side of it, and then you run up and distribute. That's the power of 3 ICT concept. We're not going to get into that today. That's a little more advanced. But this guy was trying to tell me, like, you lean on too much on indicators, they lag. Now, yes, the EMA is a lagging indicator. The RSI is a lagging indicator. The MACD, a lot of the indicators people told us to use in 2020 to learn how to trade are lagging. They're not useless, but they lag. A fair value gap is not a lagging indicator. Most ICT indicators are not lagging. They're just real time. And he could not understand that because he doesn't trade ICT. A fair value gap is just a gap between 3 candles. There's no data behind it. It's just a gap between 3 candles. It's either there or it's not. And with ICT, a lot of people draw their own fair value gaps. I used to, but I don't. I use this indicator, and then you see how I drew it out wide. I draw it out wide for myself on the day we're at, and this is the day we were at. Boom. That's it. That's it. Now, you don't need this indicator. You can draw these gaps on your own. However, I like to draw them. I like the indicator because then I can just draw them. I can see Like here, I definitely missed this target. I had a 15-minute gap somewhere in here. I took profit at, but I could have held it to the 4-hour gap. I didn't have to draw that. This is just on my 4-hour chart. You see what I'm saying? It's not a data lag gap. Now, power of 3, I guess we can get into it. The power of 3 is an ICT concept of when we consolidate, we're going to trade sideways, which usually happens in Asian and London session. This is also an ICT indicator. The ICT sessions indicator. It's great. And it's ICT kill zone times, not regular Forex or regular futures Asian and London times. So if you trade ICT, you need this one versus the regular ones. Anyways, so we accumulate, we trade sideways overnight. We finally sweep sell side with SMT, which is beautiful. Clear signs of reversal, and then you take it up. I did not trade this properly because I did have my sessions indicator off, and then I was on the 15-minute or the 5-minute I was on, and this candle out of this hourly fair value gap, the lower one, I thought we were going to reverse to the downside, and that was my bad because I would have known we swept the sell side, clear sign for buys. But also, this is not good price action because you didn't get confirmation for buys till way up here, and your stop loss is way down here, and then your target is up here. It didn't even move that far. So this was a day I probably wouldn't even trade it if I was in my my bullish bias. But again, still was a decent trade if you took it. A lot of people took it. They went down to the 1 minute or something to take it. I trade on the 15-minute, usually in the 5, and obviously the 4-hour. But it did do its thing for a little bit, but it wasn't that nice of a candle like this candle was, or like this candle was. But the 10 a.m. candle also lines up with so many trading concepts. So at 10 a.m. we have the 950 to 1010 macros, again all ICT, sorry for y'all. Then we have the 10 a.m. ICT silver bullet, which is a reversal strategy, and then you have just the start of the 10 a.m. to 2 p.m. 4-hour candle. So I used to trade the 9:30 open, and I also used to trade at 8:30. But these 3 strategies all line up with 10 a.m. So I switched to 10 a.m. and it's been so much better. I got funded, and I've gotten the least fake outs. The least fake outs though is just sitting on the higher time frame. That has nothing to do with strategy. You need to sit on the higher time frame first, and then you go down to a lower time frame when your bias is confirmed. This is a day we probably could have just gotten buys with a stop loss below here right at 10 o'clock. Like I said, I'll show y'all 10 o'clock is here. But again, the risk to reward was just not the greatest. 10 a.m. opened here. So your entry would have been here. Stop loss below at the low made at 9:30. And then take profit at maybe the 50% of the gap. Okay, it's a 1 to 1.5. I'll do a 1 to 1.5. So actually, it's not but it still wasn't, the best. I usually get like 1 to 3s, 1 to 4s at this time frame. So I'm like, it wasn't the best. But however, you could have gotten in right at 10 o'clock. Obviously, if you're a 9:30 trader today, you got a better entry than we did. But most of y'all would have waited for this. What's the 15-minute chart? Let's see on the 5-minute chart if we get a better entry. Well, we would get in at 10 o'clock, so our entry would be the same. But for the 9:30 people, yeah, your entry would have been here for a nice 1 to 2.6. Okay, yeah, that's a decent trade. It traded, but it took all day to do that, which I don't think is that decent. But that's really it. So liquidity, you either wait for a liquidity sweep. Okay, let's get into nitty gritty. You either wait for a liquidity sweep, which means you sweep a liquidity, you go past it a little bit, and then you immediately reverse off of it. That is a liquidity sweep. Or you wait for a bounce in the fair value gap, like this. You see it bounce in the fair value gap, and then it immediately reversed. That's what you're waiting for. And then on the other side, you want a full candle close run down through a liquidity point for a continuation if it's going to continue down, or you want a fair value gap to be inverted, which means if it's a bearish one, that's why I changed the colors of mine. Most people who draw their fair value gaps, they're the same color. They're just all blue or all gray or whatever. No, I do mine red for bearish, green for bullish. So if you want it to be respected properly of a bullish fair value gap, if you don't know ICT concepts, it should bounce and go up. If it's a bearish one, it should bounce and go down. that makes sense. Bounce, go down, on a bearish, bullish, bounce, and go up. So if you invert it, so if we close above a bearish one, we should be going up. And if we close below a bullish one, we should be going down. I don't know if that makes sense. Prime example here. But you need a candle close, not a wick. You see the wick? You don't like that. It wound up still going down, but you want a full candle close below a bullish one, and then a candle close above for a bearish one. This one was candle close, and then obviously went down. But you know, for the most part, you can trade off this. That's the entry I got on Friday. Once we candle closed above, where was it? Once we candle closed above this fair value gap here, I entered my trade for buys. And I just drew it out longer from the indicator. So that's all you need to do. That's it. So you just wait for fair value gaps to be respected or inverted. And you wait for liquidity sweeps to be swept in the reverse. Like this is a beautiful liquidity sweep here, even though it came down lower and did it again, and then it finally reversed. And that's why you wait for extra confirmation, which is the market structure shift I showed you earlier. We got a liquidity sweep here. For, like I said, for a market structure shift back to the upside, you need a candle close above the high that was made before. We did not candle close above this high. And then what happened? We went down, swept liquidity again, and then we rejected off of it, and then we candle closed above. Now you're in buys, if that makes sense. That makes sense. You weren't in buys here because, see, you would have got stopped out because your stop loss would have been at this low. Also, ICT concepts, your stop losses and take profits are liquidity points. If you catch a reversal, your stop loss should be the bottom of the reversal. So obviously, as 10 a.m. traders, our stop loss would have been down here. Because you see, news almost got your ass. And then your stop loss is a fair value gap or liquidity point. The next liquidity point was one like way up. It wasn't way up there, but it was kind of far from the gap. So I didn't think we were going that high, and we did not. So maybe we'll go up there on Monday. But that's it. You just have to keep it simple. And then the last thing y'all need is you need to find a time frame you like to trade on. Again, I like to trade at 10 o'clock. Some people like 9:30. Even though this is, 9:30. Some people like 8:30, which I used to trade at 8:30. See? 8:30 is here, but you could have got stopped out. Or at least, because I was trading 8:30, and then I noticed sometimes like 9:30 would still either give me another entry, or it would just trade sideways until 9:30, and 9:30 it would pick up the volatility. So I switched back to 9:30 or 10 o'clock. But I like 10 o'clock because 9:30 can fake you out sometimes. Like the day I got funded, 9:30 was at, or even this day, Thursday. Look at this 9:30 price action. I don't know what the fuck that is. Versus 10 o'clock, we got a clear fair value gap, a clear tap in fair value gap, and then we continue the rest of the day. So 10 a.m. I feel like you just get the best. And it's usually, there's usually no more news after that. Obviously on Friday, we got 10 a.m. news. So I waited for the 10 a.m. news candle. But I like, again, the 4-hour chart. So this is the 4-hour chart. 4-hour chart respects things so much nicer. And then, like I said, tapping the fair value gap. We tapped in the fair value gap again. I think both of these days. And also, it will kind of be obvious with two reasons. Not super obvious. Thank you for the gift. Either sell side, you want this ICT sessions indicator on, because if we swept sell side, we'll usually be going up, and if we swept buy side already, we'll usually be going down. Now, another thing about 10 a.m. that's so beautiful, you'll get on at 10 a.m. and you'll see this candle. We're already up here. You'll already be up here, or you'll already be down here, and you'll kind of know we're either going to reverse to the upside or reverse to the downside, depending on where you're at. Then there are days like this where we obviously had a continuation play. How do we know? Price action. Like I said, price action, you can trade ICT without price action, but price action will help you on days like this. Now, you can only trade reversals. There's nothing wrong with that at all at 10 a.m. You can just, if a day where it continues lower, you just don't trade that day, because like I said, continuations are kind of rare. They're not super rare, but I feel like you'll get more reversals at 10 a.m. than continuations, but you see we got two back to back, not back to back. We had, this was what, Friday, Tuesday, Wednesday, Thursday we got regular reversals, and then Friday we got continuation. So maybe I think 60% reversals, 40% continuations, if that makes sense. This is a hammer candle. This is a strong inclination of the direction. If you see a hammer candle like this where it's a long wick, which means we're really going down, we went all the way up here and we closed with a small body, we're going in the direction of the small body. So if you see that on like a blue candle like this, I mean, we did come down a little bit on this one, but like you want a long wick like this, like a long wick. This was a day we clearly just bought sells. Do you trade futures or options? Futures. I did start trading options though. I started as an options trader. I always suggest starting as an options trader because you can trade with a little bit of money and you can get your fear out of trading. Because with futures, you have to use, like futures, I'm trading the smallest amount of NQ contracts, not ES. ES you can trade kind of like options with a little bit of money. But futures, NQ futures, I'm risking $130 a day, which is a lot for a lot of people. It's honestly kind of a lot for me. I've been a little emotional since I've been back on my live account. But with options, I could trade like $10 a day, $30 a day, $20 a day. Sometimes you can even find $5 options. And then you can really get used to like making and losing $5, making and losing $10. And you're not scared to take trades. Versus the more money you risk, you're a little more scared to take trades. So I always suggest options, but I did switch to futures because of prop firms. I trade prop firms. I just got funded with Top Steps. Now I copy trade my Top Step prop firm with my live account, if that makes sense. Then there's no prop firms for options, so you always have to only use your own money or paper trade. This was a day we just continued straight down. You know what I'm saying? There's this. But yes, so you just see how it bounces off gaps or it will inverse gaps. So say as soon as we close below this green gap here, that's another sign for you to be like, what? We're in sells. And that's all you need. That's literally all you need to trade. That's all I used to trade. And then as a beginner, I said simplify it. Pick a time frame. If you like 6 p.m., if you like midnight, if you like 10 a.m., whatever. Like this guy was commenting on my videos recently, like, I scalp. I take like 10 trades a day, And he's like, well, if you have a good win rate, why don't you trade more? Because I don't need to. And 2, I like 10 a.m. because like I said, the 10 a.m. candle is the biggest candle of the day. So I can usually get a good move and make a good bit of money and go on about my day. So there's that. But yeah, this is all you need. Liquidity. And then yes, you might take profit here. Don't piss me off. You would have took profit at this fair value, this line of liquidity on the 4-hour, which I did. You would go on a lower time frame, obviously, because you have to wait for a candle close. That's also important. I just made a broker account. Should I make a Robinhood account too? If you trade options, Robinhood's good. Robinhood also just got futures, but I've never traded it there. Robinhood just, they're like you'll buy a options contract and it might not fill you, and you have to like keep trying to buy it, which I don't like about Robinhood. It won't fill you that fast, but it is nice. It is very beginner friendly. It's nice to show your P&L on Robinhood, but that's all you need. What method are you using? ICT concepts. Okay, so when this happens, you will need to go to a lower time frame. Like this is a 4-hour chart. You should not be trading the 4-hour chart. You should be looking at the 4-hour chart because then you know at 10 o'clock when we get on the chart, we get on at 10 a.m. This is a clear day to get in sales. We've already sold. We've already had 2 candles. What is the next liquidity point here? That's it. A swing. There's no swing low between here and here before we got on the chart. Sell. Boom. I made, I think, this is my first big day on my funding account. I think I made $800 this day. And then I got funded on another day for $950. But this is it's like, but then you want to go on a lower time frame. You can go on a 3-minute, you can go on I like the 5-minute. I might try the 2 and the 3. I don't like the 1. The 1 has been getting me faked out more than I liked, but I used to really love the 1-minute time frame. So here, you wait for a candle close on whatever your respective time frame is, and we got one right at 10 o'clock. We would have got in for the 10 o'clock open. Since it's a lower candle, means we opened at the high. Stop loss below probably this swing higher, the top of the gap. Take profit at Boom. Look at this beautiful 1 to 4 trade you would have caught that we caught on live. I traded this live if you trade with me. That's it. You want to wait for a full though. Technically, you want to wait for a full candle close below it. So most of us would have gotten in on this white candle that closed, and then stop loss maybe above this high or above this high. Because you want to wait for a for sure candle close, not a wick. Because wicks, oh, excuse me, I sneezed so loud. I hope that wasn't loud for y'all. Wicks, it can do this and then it can easily reverse on your ass. You want a candle close out of a gap, and you want a candle close out of a liquidity point too, if that makes sense. So you want a candle close, not a wick. Now some people trade wicks, but you'll get faked out more so on wicks. Candle close, not wicks, if that makes sense. Wicks are nice for liquidity sweeps. So if you have a swing high and you wanted to come up and like take out liquidity, it would be nice to have a lovely wick. Let's see if I can find one. Not quite. Here's one. It didn't really reverse that fast though, but we took out this liquidity with a lovely wick, and then we reversed straight from it. That is a nice liquidity sweep. That is beautiful. And then obviously it came back to retest, and then it ran down. But obviously this is Asian and London session, so the volatility is not as big, but it's still a good move. This is a nice turtle soup. Where was your take profit? Another liquidity point. That's how you know. Now you could just do a 1 to 2, but look how we swept this liquidity point. Boom, reverse. You see what I'm saying? That is a liquidity sweep. A little bit of room and then reverse. And then a full candle close is something like this. You see how we just candle closed below and we just kept going down a bit. That is not a liquidity sweep. That's a full like break of structure. I was just about to ask you, do you trade from, yeah, obviously, yeah. The liquidity sweeps is it. Liquidity and fair value gaps is all I use. So a lot of people get on here and they say ICT concepts are so complicated. And I'm like, yes, he has so many fucking concepts, but if you just stick to the 2 that you like, well, really 3. You need liquidity. What is ICT concept? ICT is inner circle trader. He's an inner circle trader on YouTube. What's the difference between this and options? Options are contracts on stocks. So you only can trade, I trade the NASDAQ, which is QQQ stock, which is good. That's the good thing about indices, obviously. If you trade indices, this guy, AA Bands FX on TikTok, he's getting actually roasted right now for being a fraud. He loves to tell people if you trade indices, you can't trade because they're too easy to trade. Why the fuck would we be trading something that's hard to trade? Let's be serious. Life is already fucking hard. Why would we trade something that's hard to trade? Anyway, good thing about indices, you can trade Forex, futures, and options with the same chart. So say I get really good at trading futures, which I am getting good at, I can go back to options right now and trade QQQ. Same thing. And then it's US 30 or NAS 100 for Forex, if that makes sense. Options are stock contracts on stocks. So you would trade Tesla, Apple. You can trade obviously QQQ and SPY, which are the same as futures. And obviously Forex is currency exchange, so it's a little different, but they have an indice version on all 3. And then options, you have to do puts and calls for buy and sell. And then there's different contracts that are in the money and out the money with options. So it's a little more complicated, I would say, but it gives you more options. So with futures, I can trade 1 micro, 2, 3, 4, 5. There's no 1.5, 1.2 like in Forex, which I like about Forex. Like you can do a 0.1 contract, a 0.2, and then you can do a 1, you know, your lot size. Futures, the smallest you can trade is 1 micro, which is pretty small. I think I risk like $100, 80 to like $150 a day, which is not ideal though. But with options, you can buy a $10 options contract, and with options, the most you'll lose is what you pay for that contract. That's why I always suggest starting with options. Futures, the price action is just a little cleaner. There is no time decay. So that was why I left options. So the options, you make money on these strong moves down, which usually happens at 10 o'clock. But when you trade sideways like this, the time decay is eating your profit. So you could be $10 in profit here, and this will make you break even, which sucks. Versus like with futures, if I'm in profit, I'm just going up $1.50, $1.50, like I'm still in profit. But the options, this can eat your profit. But with options, you're not scared to hold trades because you paid $10 and you can easily turn $10 into 50, 60. You can turn 100 into like 2,000. Like it's a different ball game. So you can gamble a little bit. So it's a little different. But also, yo, what's up? ES is the S&P 500 futures. NQ is the NASDAQ. If that makes sense. Which is QQQ and SPY stocks. So do with that what you will. Sorry, I'm going back in the chat. What's the difference? But yeah, I see concept. I see the inner circle trader. He made all these concepts. He studied the market and he told us like the market has gaps, the market has this, the market has that, and we just play off of it. And honestly, it works. A lot of people try ICT. Even people who don't try ICT, they've added either liquidity or they've added fair value gaps or they added something of ICT into their strategy. That's the good part about it. But I'm learning options. I haven't learned about futures, so thanks for the explanation. Good. I feel like everyone starts with options, especially if you're American. It's just again, options for me were I do miss them, honestly. I do. I just like copy trading a prop firm and trading my own money because it gives me a check and balance. You know what I'm saying? If that makes sense to you. But with options, you can just trade with so little. But also the options, since it's a stock, you only can trade 9:30 to 4 o'clock. That's also a main difference that people like. So a lot of people lately have been telling me they trade Asian session, which is technically right now, but it's the weekend. So this time on Sunday night tomorrow, people might start trading. With options, you cannot. You can only trade 9:30 to 4:30. So basically, if you're a futures trader, options traders and me, we would trade this. This is our move. But with futures, I could take the top of the move and got in way up here. I could have traded at 3 or 5 a.m. So that's the thing. Do you use a bot? No, bots are stupid. Some bots say they work. I bought one once, thinking I could use it to pass a prop firm, and the guy scammed me. And the bot might work. I still have the bot, but his instructions were terrible, and I got my money back. I don't really believe in bots. I think they're scammers. Maybe try them with your own money, but not with prop firms. They're not going to let you use prop firms. I trade by myself. I don't use a bot. But if they become really good, then yeah. I know people who use high-frequency bots to pass their prop firms, but then they say they trade on their own. But then why wouldn't you just put that in some real money? You see what I'm saying? Like, you're using a bot to pass your prop firm, but then you're not using it to just grow your account. Fishy to me, but maybe one day, but no. I just trade with my own, but yes. That's really like what you need, y'all. You just need liquidity and price action, and obviously there's other terms like Fibonacci. So, and then the market structure shift or changing state delivery. So basically, say you wanted for an inverse, the inverse is all you need. Like this. This is not the biggest of an inverse, unfortunately, but say all you needed was a candle close above this and then take it to a liquidity point, which was here. It didn't go all the way up to this one, so if that's your target, you lost this trade, which is fine. It happens. Or you just sold here and then you're done. But for a market structure shift, you need to make sure, like I said, we're making swing highs and swing lows. Once you candle close below, why does it keep doing that? Once you candle close below this swing low here, we are now in a downtrend. That's market shift. I started trading, adding change in the state delivery, which is off order blocks, which is more confusing, but it's a body of the white candles before a run up. So it would be here to here, which actually lines up the market structure shift. Actually, it does not. The body of the candles are here. So that's when I would get my change in state delivery, so I can enter a little bit sooner than the market structure shift. Either way, you need to wait for a candle close below both of these, or one of these. If you're order block trader or changing the state delivery, you want a candle close here before you get in sales. For a market structure shift, you want a candle close below here, which obviously your entry would have been down here, or you would have went down to a lower time frame, or maybe been impatient and gotten here somewhere. And then for inverse back down, if you're waiting for inverse back down, because again, this is bearish, right? Candle close above up. You wait for the candle close below, and then you get in sales again to go lower. All three of those trades played out very nicely. Obviously, if you got in up here, you have more points than if you got in here. But if you got in here, you still could take it to this liquidity point. If you wanted more, you could have took it to this liquidity point and then this liquidity point, which you wound up hitting perfectly. Did you join the ICT space today? I did not. I don't really be on Twitter as much as I should be. Was he talking? Was he crashing out again? Or was he dropping gems? Honestly, I love ICT and I love him crashing out because I'm a petty person and I feel like if you talk shit about me for 2, 3, 4 months on YouTube, I'm going to come back on Twitter and eat all y'all up. So y'all, people calling ICT immature. He is 50, I am 30, but we're both old enough to probably not be arguing on the internet. But hey, you start with him, he going to finish it. That's my mentor and I'm going to second that. But it's pretty chill. Good. But yeah, a lot of people like to do that. I see it's so complicated. It's so complicated. Find what you like. Now, you might like Power of 3. Power of 3 is accumulation, which is kind of hard to see sometimes. It really is. Accumulation, distribution, manipulation, and then distribute so you run down, which it looks like basically this. You'll trade sideways. And then one day, you'll sweep a liquidity of one of the sides, and then you'll just run down the rest of the day. Or the rest of the hour, or whatever time frame you're on. And then same with the other side. You'll get like you'll trade sideways. Then you'll get a sweep of sell side, and then you'll run up, the rest of the day. And sometimes it's clear. So that's why I don't only trade Power 3. I don't really focus on it. But there are days like Friday where it was clear. I didn't pay attention to it, and I didn't play it. Turtle Soup Trader myself, been trading IFT. Turtle Soup Trader, love Turtle Soup Traders. Snipers of the game. I do try to catch a turtle soup here and there. That's also why I like 10 a.m. I usually can catch a nice turtle soup. I usually can. Like this. This is a turtle soup. We have this liquidity here. It traded above it, immediately rejected. As soon as you got a candle close under this yellow line, you could get in sells. This is a practice thing. People ask me, how do you catch a turtle soup? That is a you in the charts thing. No one can tell you how to be a sniper but you in your eyes. And then you take it down. Like that. That's a lovely turtle soup trade. How much does the futures contract cost? One micro is like $2 per tick. And then a regular one is $20 per tick for the NASDAQ. And then for ES, and the S&P 500 is $5 per micro and $50 per mini. But I thought that meant you'll make more on ES, and it's false. ES ticks are, the NQ has more ticks in these moves than ES does. So this could be like $1,000, but on ES this could be like 100 because the ticks are different. I learned that after switching, because I was like trading ES. I started with ES because I thought I could make more money. Even though it is the easier one, you'll actually risk less and make less, but you'll risk less and you can make You can risk $30 to make 100 versus NQ. Your minimum you're gonna risk is $80 to $150 with just one micro. Sucks to say, but then you can make a bunch. It moves so fast, so that's the only thing about NQ that got me to it. But it has been a new emotional roller coaster from going back to it. But yeah. That's all you need from me. Like I said, look at this. Liquidity sweep. This is the day we clearly bought sells at 10 o'clock. 9:30 got the top of it. Accumulation, which usually accumulates in Asia and London. We swept liquidity, immediately reversed, and then we just took it down. And I took it all the way down. Beautiful day. I actually really enjoyed that day. He's saying what's IFT, or did you mean ICT and it's just a typo? When you said been trading IFT, maybe you said Turtle Soup Trader, but been trading ICT is probably what you meant, and it auto-corrected or whatever is IFT. But that's all you need. I mean, you can trade divergence, but I don't trade it that often, obviously, because divergence is a lagging concept or indicator, I should say. Like, you're already going to be ready to reverse or maybe in it before. There are some days you catch it and it's like clear and before you get on a trade, but sometimes, look at you asking me what I'm talking about. Sometimes I don't look for S&P divergence because sometimes it lags. I've noticed that you'll see this, which means ES took this high and we didn't, but then NQ will eventually take it later. It helps for like this. Yes, you got you got a little rundown, but there are days where like I was like, oh, S&T, and then 20 minutes later, NQ took the high too. So I'm like, you don't really know until you know, and obviously you'll know, and or you'll just, like I said, there was a day where I think Tay, who's in this chat, was like, we have S&T divergence on a buy. It was like 10 o'clock. And like ES had swept the low, or we swept the low and ES didn't. But I already had just waited for the inversion for value gap to go back up. So I didn't really need S&P divergence, but it would have double confirmed my buys, or I could have gotten earlier, but I just still waited for like the for value gap tap. So it's like you need it, but you don't need it, if that makes sense. Are you a full-time day trader? I've been a full-time day trader. I quit my job to do this. And Kimmel just did a video about it, which I stitched, and I recorded a TikTok video about it. I'll post soon, about like how we both just quit our jobs to trade before we were even profitable. So yeah, I've been a full-time day trader now since I started. I started full-time. I didn't give a shit. Cause I really quit my job because I was drop shipping, and I was making like 50K months drop shipping. And I said I'll quit my job when I finally scale my first product. But then I didn't like the profit margins of drop shipping at all. So then I just was paying down credit cards from drop shipping, like testing other products, even though I finally scaled a product. And then I was like, I'm just a person where I cannot not do anything. That's how I got into trading in 2020, because my job, I wasn't doing anything. And then I just started trading again in October. I just started learning, found ICT, and then I've been doing it ever since. But always have a plan. Like I said, I was making money even though I quit. You should always have an investment life insurance policy. If you want to talk about that, you probably have to book a one-on-one. I might have a video on it. Because before I started trading, I've always been investing when I was in costumes and like buying houses and doing shit, like wealth shit. But I have disability insurance with my life insurance policy. Again, I'm a freelance worker when I was in film. If you're not a freelance worker, you probably don't have disability insurance. But I did. A lot of people I work with do, because you can literally work for 2 weeks. I can go on set right now. Kanye West can call me and say, hey, I got a concert, let's work. And then I don't have a job. I can easily go to unemployment and go to disability and get paid until I get my next job. It's the best thing ever. I get it. Freelance work is very scary. Networking is very scary. I was very anti-freelance when I moved to LA as well, and then I couldn't find a job, or the jobs that actually hired me, the pay was shitty. So I went freelance, and it was the best decision I ever made, because it teaches you how to invest. It teaches you how to have a Roth IRA. I am in a union. I joined a wardrobe union, and I still pay into it, and just in case I ever want to go back to work, or just in case I want to work tomorrow with my friends and I want to get a good rate. So I have insurance through my union, but that's a whole other topic for a whole other day. But I don't mentor yet. You can book a one-on-one with me in my bio, and we'll go over the charts one-on-one. I've done a few already, but I don't fully like mentor yet. I do journal in Google Sheets, Google Slides. I Google every trade I do in Google Slides, and then for Sheets, it's only my live account, because I don't like to take the funded account seriously, because it's there to ease my emotions. So my live account, real money, I do, this. And then I journal every trade, though, and I'll mark paper trading. I'll mark funded. I'll mark. And then if it says nothing, it means I traded with my real money. Copy trading it with my funded account, but still. So I do it like that. You should be journaling your trades. I've been working on my year of consistent profits before becoming a full-time trader. Good for you. Everyone do what's best for them. I don't suggest quitting your job, obviously. The job market is fucking shitty. I just have a job where I knew I can always go back. So it's different. Like, film is different. I literally can text someone right now and say, hey, dude, like, trading sucks. I want to go on set and, like, work. And then they'll be like, yeah, start tomorrow. Someone texted me the other day, like, hey, can you come to Koreatown right now and work on a job? And I was like, I'm literally in Mexico. I miss you, but I'm in Mexico. But, like, that's how Hollywood is. Sometimes it's, like, a drop of a dime. Like, hey, can you come work? And then you'll be like, yeah. And then, or you'll be like, no, I don't want to work. So that's why I went full-time day trading, just because I had already quit my job. And then I sold my house to move to Mexico to buy me some more time. I'm trying to never go back to a job ever again. Obviously, if I have to, then you have to. That's what I'm saying. Like, you can quit your job if you want and just be ready to, like, if you don't get trading in time, go back to a job. Like, it's not the end of the world. Like, we all worked before. I worked for 10 years. Like, it's, you know what I'm saying? So Do with that what you will. You don't have to quit your job to trade. But for me, I couldn't trade with my job. I did want an easy office job to trade with, but I didn't really look for one for real. I just focused on trading. But that was my original plan, to get like an easy office job or like a government job or something. Especially in LA, the stock market opened. This is 7 a.m. for me, so I could trade in the morning and then go to my work at like 9 or 10 or something, depending on the job. But with film, you cannot. Film, I'm on set at 5 a.m. I'm dressing people. I'm working with celebrities. I can't be getting yelled at by Lady Gaga because I'm trying to take a trade while she's asking me to put on her shoes. Like, it's not ideal. But I know people who did trade on TV shows on set, but that, again, that's a whole, y'all don't even know what set is really like. But once everyone's dressed, because I'm a costumer, on certain TV shows, you do nothing the rest of the day. But then again, it depends on your call time. It depends on, like, you might be doing nothing, but it's now, after my setup time. So it's just a little different. Platforms I use, I trade on Ninja Trader, and I use TradingView, which is how I chart, and I trade on Ninja Trader. That's what you use to copy your trades. I think it's the only broker that lets you copy your trades, Ninja Trader. But good for you, working for a year of consistent profits before you quit your job. I have an office job that allows me to trade in the morning. See, you're killing it. That's the dream, honestly. So good for you. Trade every morning. Quit your job when you're ready. It's no point. And the job market is very bad, so I wouldn't suggest it. Unless you're really confident in yourself, too. Like, hey, I'm always a fan of doing what you want. Work will always be there. Life will always be there. I actually am a very capitalist. I'm trading because I'd rather be rich than poor, but I would love to dismantle the system altogether. So if you quit your job because you don't feel like working, YOLO. But also, be smart about it. You know what I'm saying? Everyone's life is different. Like, if you have good parents who will take care of you, like I do, you quit your job. If you don't, you can't quit your job, everyone's different. So, do what's best for you. If you have kids, I don't have kids, If you're in high school, like all the high school kids who are trading, like they're living the fucking dream, actually. I still have, like, bills. But my first step in my wealth journey was getting rid of my bills. So, that was, like, my cars, I buy cash. I haven't had a car payment, health insurance free to my union, like I got all my bills down besides rent and car insurance. And now that I moved to Mexico, I don't have to pay car insurance. I just pay like $10 a month for like storage fee for the car or whatever the fuck. So like if you get your bills down, you can quit your job obviously faster than most people. So, plan things out. But some people, it takes years to trade, so it's different. I was confident. I already knew what ICT concepts, I was getting it. So I was kind of already like, I could get this in less than a year. And I was profitable in 3 months, and then I got unprofitable, and then I got profitable again, and then now I'm funded. So it is what it is. But this is all you need. Fair value gaps, liquidity, best liquidity. Oh yeah, let's talk about that actually before we get off the charts for today. The best liquidity points are daily highs and lows, which I personally don't trade because it doesn't hit them every day. I like to hit things that happen almost every day. I like to trade every day. So that's also something you have to do for your trading strategy. If you like order blocks, you might not get a trade every day, but when you get it, it'll be a nice trade. But for me, I like fair value gaps because you will get a fair value gap tab every day. That makes sense. Session highs and lows, which are the ones I think hit every day. Session highs and lows, and then equal highs and lows, which are everyone's favorite liquidity point. And that's it. So like I said, these are the sessions. So my target, or I'm waiting for a reversal at these lows, and my target, there's days where like this, where you caught the reversal down here, your first target was the London high, and then it kept running for you if you wanted it. But your trade from here to here is good enough, and then you're done for the day. And then let's see, equal highs are like these London highs are almost equal, but there's some that are like legit equal. Like these are legit equal, and then you'll know there's just like swing highs that are literally next to each other. These are almost equal highs. Equal lows, sorry. But there's some that are legitimately like two swing lows or swing highs that are on the same axis. and you know we're going there. Even though last week we had like quadruple equal highs that we still haven't fucking these. I thought we were going to these last week and we did not. You see how these are literally equal to each other, and then there's this one. And like I've been hoping we're going up to these for like a week now. So that's actually probably where we're going next week. Now I'm thinking about it. We're finally pushing back up to the equal highs I thought we were hitting last week. That's our target next week or Monday probably. So that's it. That is it. You just simplify it the way you can, especially in the beginning. A lot of gurus say it, but I didn't believe it at first. But you do. You need to trade one time, one setup, once a day, and in the beginning. And then once you get your emotions good and you start making money consistently, then you can add other shit. So for me, it's 10 o'clock, looking at the 4-hour chart. Are we going up? Are we going down? Getting in. Are we bouncing up a 4-hour gap? Are we sweeping liquidity? Whatever. That's my thing. If it's 9:30 for you, if it's EMA crosses for you, whatever it is, just take it and keep it simple, and it will help you so much more than trying to learn every ICT concept, every strategy. Just pick one that makes sense to you. When you see it, take it. If you don't see it, you don't care. That's what us beginners do. Our strategy won't hit one day and someone else's hit that day, and we're like, fuck, we could have caught that. Let me learn that. No, absolutely not. Absolutely not. It's one day. Move on. Tomorrow, your strategy will hit. Boom. You see what I'm saying? Like, just keep it simple. Don't be afraid to use indicators. I don't give a fuck what no one says. Because I also wear glasses. And I'm 31 now. I'm not that old, but I feel like if I don't wear glasses and I don't use these indicators, and I have to zoom in and draw all my fair value gaps, draw all my London liquidity points, I will be blind in like 5 years. In my opinion, it could be wrong. But to me, nothing hurts. Obviously, a lot of ICT traders don't. Their strategies, their charts are blank, which, fair. I usually will draw the lines and then turn this off. Like, I'll draw the line and then I'll turn it off. But my fair value gaps are always going to be there. So now we know, like, okay, this is the Asian and London low. Boom. Once we sweep this, we're going up. Then you could just draw it like that. But look at all these gaps. I'm not drawing all these gaps. And you don't know which one's going to be respected. That's what pissed me off about days where there's a bunch of fair value gaps, especially in a lower time frame. Which one's going to be respected? It didn't tap into this gap. This one was respected. This one was. And then boom. Actually, it did come into this one. So yeah, if you waited for it to come into this gap, it finally did. And then, you know, that could have been your time to buy. But that was after, it's 12:45. I would still be on the chart maybe. And then boom, we ran up. And that's a trade you could have took from here to this liquidity point. The one made right before you ran down. That's your target. Liquidity points are always your target. To be safe. If it goes higher, it goes higher. If it doesn't, it doesn't. Because if you would have waited and had a target up here, you would have lost all that profit. So just take it to liquidity point. I always do the first one. And then that's a good trade. Stop loss below this low for 2.28. Can't beat that. No drawdown. Just a smooth trade. See what I'm saying? My eval account is about to rebuild. It might be full port time. Exactly, Tay. If you're already about to get rebuild, you might as well. This would have been a good trade to full port, honestly. But some people might have already been in it on this fair value gap. Because I'm impatient, so I probably would have got it on this. But see, the people who can wait for this gap, you got a nice tap, you know? So it just depends on your personality, and it depends. Obviously, I would have been in on one of these. I would have been in on one of these gaps, first of all. But then your stop loss is bigger and your drawdown. But at least your drawdown was quick. Well, not really. It came down, and then your drawdown came in again, and then you went up. But yeah, y'all, that's it. That's all you need. And then you'll find out what time you prefer. You might want to sit through all this. That could be your thing. I try to do 10, and then I'll mark 12, because I'd love to be off at 12. But I will leave one just in case. When something like one, the latest. Like if there's no entry before one, I'm not taking it. And then boom, we got a nice one. But usually 10 to 12 is usually where I'm at. And that's how I am. Then I'm like, boom, I'm off. I'm out of here. Now if you want to sit from, again, 9:30 to 4, which is, you know, That's if you want to sit from 8:30 or 7 or even midnight. You know, whatever is best for you. Like, do what's best for you. Yeah, that's it for tonight. We'll probably continue back testing tomorrow. I think I just want to throw in education sessions in there because I feel like some people come on my back testing lines and they don't know what's going on, and we need to throw in some education in there, and you know why we do what we do when we back test. So yeah, I'll see y'all tomorrow at 8 p.m. Eastern, 5 Pacific, and we'll continue this. We'll probably do a little bit of education in the front, and then we'll back test. And then I'll be trading paper money this week. I'm setting that goal for myself. So if you're gonna live trade me this week, it will be fake money, which means though, as beginners, you should be using paper money as well. You should not be scared to trade. Get a paper trading account. All you gotta do is make TradingView account. Go down here to the panel, hit paper trading, and it will literally log your ass in, and you can actually take trades on TradingView. It's so simple. There's no excuse. So you can take paper trades with me if you want. If not, you can watch. And then if not, if you want to copy trade real money with another millionaire trader on live, you can also do that as well. But yeah, I'll see y'all tomorrow and see y'all Monday morning.